Richardson, Head of Sales here at Mortgages for Business, and I'm with Jeni Browne, our Director of Sales. Today we're going to talk a little bit about last year and look forward into 2020 and our views, and particularly Jeni's views on what's changed and what's good, and maybe a review of what we think is going to be the exciting topics in 2020.
Sure.
So it's probably worth, first of all, just starting and wishing all our clients a Happy New Year. What's your kind of interpretation of what 2019 really delivered for our clients in the market?
Okay, so I think it would be remiss to pretend that 2019 was anything other than a fairly flat year. When we look at property prices and what actually happened, across the board, across the whole country, and there are variations depending on which report you actually read, but the general consensus is that house prices remained flat, with an overall uplift of £2,000 for the average property house price increase across the whole of the UK. There are obviously within that some fairly significant regional variances. So for example, London is down, whereas parts of the northwest and East Anglia have fared quite well and seen good growth, and Wales has also done particularly well. Yeah. So, but across the board, it's a £2,000 increase in the average house price.
So some growth, but not maybe at the same speed as we've seen in previous years.
Absolutely. But I think what's really important is that there was a lot of doom and gloom in the press, when Brexit, house prices are going to fall off a cliff, reductions of 20% and all this kind of stuff. And I don't think that's really the sentiment anymore. And actually what we saw as a business was very much an uptick in purchase business towards the back end of 2019. And actually in terms of our predictions for 2020, we're feeling that actually now the election has happened, and I appreciate the outcome might not be what everybody wanted, and a looming Brexit is not necessarily what everyone wants. What we do have now is a clear path forwards. And I think people really have just been waiting for some certainty and some kind of, a surety about what the future holds. And now that's in front. There's a pent-up demand for people wanting to buy their first homes, move homes, invest. And the expectation is that now the floodgates will really open and things will really start to move on.
Yeah, let's hope so.
Yes.
And I think also, from last year's uncertainty, lenders have reacted, and we'll come a little bit more onto that, on what we think is going to happen in the future. And you mentioned house prices have obviously, fairly stable, some growth in some hotspot areas. What about the rental market, particularly in terms of rental yields and demand?
Yeah, so the rental market is doing really well, and actually the rental piece is a real good news story. So actually at the moment rents are the highest they've ever been. The average rent in the UK is over £840 now, which is its record high. Yeah. What we're seeing is that the demand for rental properties in the private rental sector is actually growing, but the number of properties or stock coming to market is not keeping up with that. And so what we're finding is that actually experts are predicting that rental income or rental figures will increase over the next 5 years, and depending on again which report you're reading, between 3 and 5% year on year for the next 5 years. So as landlords, that's a really big positive to take away.
Great returns.
Absolutely.
Yeah. And again, are we seeing any sort of seasonal trends in that kind of, regional trends in that kind of market, or is that's a sort of 3 to 5% growth nationally?
Yes, that's across the board. I think there are some areas that have done particularly well. Interestingly, London has done well in terms of rental growth, conversely to the property values. Yeah. And these things, they kind of ebb and flow. So some areas will kind of have a real step up, and then it will kind of calm down again. But yeah, across the board, 3 to 5% is the prediction.
And do you think that's borne about by the demand in properties, or the lack of supply of properties, or how do you think that market has particularly stayed buoyant?
Yeah, it's definitely a combination of the two, actually. So what I think is really worth mentioning is that people have been saying, portfolio landlords, people with large, are just going to sell everything because they're so fed up with the tax changes and the regulatory changes and all these things that obviously all the landlords are cheesed off about. But actually, based on lots of research that's been going on within the market, landlords are growing their portfolios, not as rapidly as in previous years, but the net position is that actually the number of private rental properties available in the sector will be growing in 2020, just not as rapidly as it's grown in maybe previous years. And so really what's driving this increase in rental demand is the fact that there are obviously more and more people wanting to rent properties, but there are not as many new properties coming to market, so it's a lack of stock. It's the supply and demand thing, as always.
Yeah, fantastic. And you spoke about it briefly in terms of the market last year. How do you think the lenders and mortgage providers are beginning to adapt and change, and what do you think the trends may well be going forward in 2020? Where may the opportunity, I suppose, arise for our clients?
I think it's fair to say that the lenders in 2019 weren't lending in the round as much money as they wanted to be. So there was a bit of a rush to the bottom on pricing. So the pricing still, even into 2020 now, is crazy, crazy good. What we've also seen is lenders really looking to find ways to attract new business by broadening their lending criteria. So I mean, you all know we have lenders coming in here all the time. What else can we do? What's the other lenders doing? How can we drive some more business forwards? And so some, certain types of borrower situations, which were almost kind of no-goes a few years ago, so expats, Airbnb properties. I mean, these are just things that everyone's doing these days. They're not big deals anymore. So I think really what we've seen is a kind of adjustment in terms of lenders looking to push out their criteria while obviously being very, very mindful of risk appetite. There's definitely been a rush to the bottom on pricing. I don't think that's going to last forever, but at the moment rates are very, very good.
Which segues nicely, I suppose, to the next question. If lenders are adapting and changing, pricing's rock bottom, is that going to continue? Or what's your view, I suppose, on what underpins all of this base rate? What's that going to do in 2020?
Oh, I should get my crystal ball out, yeah. So there's two schools of thought here. One school of thought is very much that if we look at the government spending plans in 2020 and the fact that the housing market is expected to pick up, both of these things are inflationary. And therefore, because of that, base rate will go up. And there are some people that are very much predicting an increase in base rate in H1 of this year. Conversely to that, one could also argue the economy is not doing particularly well just now. And also Brexit is not sorted out. So there's still a huge amount of nerves within our economy. And so actually putting up base rate at the moment would be a really, really bad decision. Personally I sit on the kind of latter school of thought, that's just my opinion. But we will have to wait and see. What I do think will definitely happen is as the housing market picks up and more people need mortgages, lenders will be under less pressure to keep their costs down really low so they can press their margins. So what will happen is actually the profit they make per pound of mortgage lending that they do, they'll be able to push that back up again. So while base rate may not move, the margins that lenders look to make on their lending will increase, and that will drive up interest rates or cost of borrowing.
Yeah, okay. So in real terms, if we were going to sum up the 5 minutes we've just spent together, last year was fairly flat, but still some significant developments in the market in terms of criteria, access to more exciting products or different opportunities for our clients. Our view on next year is actually the market will increase, the demand is still there, rental yields are going up, so it's a really positive thing for our clients to take advantage of the opportunity, but we are sitting potentially on a position where, one way or the other, whichever school of thought you think you might sit in, we anticipate that actually mortgage lending rates may well start to increase. So now is really the time and opportunity for clients to start speaking to us and taking advantage of what's currently available. Now this is particularly relevant, I would have thought, for remortgage market if, like you say, a lot of our customers are sitting in 5-year deals that are coming to the end, or 2 years ago, looking for remortgage and things like that. So the remortgage market is significant, where customers need to take advantage and not sit and wait.
Yeah, and I think actually it's really important just to kind of flag up to people that your mortgage offers are valid for between 3 and 6 months. So if you're sitting here now at the moment thinking, God, it's only January and I don't need a remortgage until June of this year, there's no point me doing anything, it's too soon. Actually, the reality is that you can secure a mortgage offer now that will carry through to be drawn down in June. So actually, if you do want to try and capitalise on the very good pricing that is available, genuinely now is a really good time to be doing that. I'd say it's the perfect time.
Fantastic. Jenny, thank you very much for your time. And just to sum up really, look, we're really happy, we're really optimistic about next year, looking forward to helping our clients even further. As usual, they can contact us at mortgagesforbusiness.co.uk or directly on 0345 345 6788.